Hello, it's Thursday the 24th. I'm FxPlew and this is the market brief. In UK inflation, that's at a 40-year high and the threat of a recession still looms over the UK economy. COVID disruption is broadly out of the way, and with the lockdown recovery well underway, Brexit has been brought back front and centre. As the economy looks pretty certain to enter a recession, Brexit, and in particular the lack of free movement of goods and labour, has been blamed for the UK's poor economic performance. Much of the Leave campaign's rather jingoistic rhetoric is now considered to be a little bit outdated and a little bit unrealistic. Now, of course, Brexit still means Brexit, and Boris certainly got Brexit done, but the pro-EU movements do have a little more economic evidence supporting their calls for a closer relationship with the Union rather than cutting ties altogether. Here we go again, right? In the market, sterling reached 120.80 against the dollar as the dollar sold off yesterday. That's actually the highest level we've been since mid-August. Go on the pound. And we open even higher. We're around 120.90 against the dollar. We're about 115.85 against the euro, and euro dollar is it's up around 104.35 this morning. Now, much of the dollar move was driven by the Fed minutes. They suggested a significant change in policy. Quoting, the majority of policymakers agree it would soon be appropriate to slow the rate of rate hikes. Of course, this has led to speculation that the Fed may pause rate hikes altogether at the next meeting, but I can't really see that myself. Inflation data suggests that we may have seen the top there, but there is still a long way to go to bring that back to within target. So I think a tapered rate hike is the more likely outcome when the Fed meet next in about 3 weeks' time. However, this did serve as a nice friendly reminder that the cycle of higher interest rates needs to come to an end at some point, and this reminder was reflected pretty quickly in the markets as the dollar sold off. The dollar index fell to 106.05 and only closed marginally higher on the day. Now, we've got non-farm payrolls next Friday, and that is now seen as a pretty crucial bit of data to determine the Fed's action. Any weakness there, any lower number in the headline figure, may drive the dollar lower, so the sweepstake should be a belter. However, the Friday before that is an even bigger deal, and that really should be the main focus. That Friday is tomorrow, and tomorrow is my birthday. Cheerio!
If you do not have a clue, then just tweet through and ask FxPlew.